Assalamu alaikum everybody. Welcome back to my channel Rapid Revision. Today this question that we are going to solve today, it's from Edexcel Accounting, and this particular question is based on income statement of a service business, and we would know this by just reading the question. The first statement itself tells you that it is a service business. They're saying Ali provides consultancy services to local businesses. He provided the following information. They have given you this table in which they've given you opening balances and closing balances. If you look here, they've given you opening balance of motor vehicle at cost, and they've given you opening balance of provision for depreciation, but they haven't given you the closing balances of motor vehicle cost and motor vehicle provision for depreciation. They haven't given you the provision for irrecoverable debts at end, but that is what you need to calculate. They've given you equity at start, that is capital at start. They've given you bank loan, which is at start, and at end the bank loan is 1800, which means that we have repaid 700 is what we have repaid, because the difference between 2500 and 1800 is 700. So because your long-term liability, that is the loan, is decreasing by 700, so that means it is you are repaying 700 as your loan amount. Basically, we are repaying the loan amount of 700. Then they've given you bank overdraft at start and at end. Then they have given you other payables, that is wages. So other payables, the interesting thing about expenses is that there are two types of there's one thing called other receivables in expenses, and then there's one thing called other payables in expenses. So what happens is that if we pay extra for the next financial year, that is my other receivable, because now I will be receiving services in the next financial year. But let's say there is this thing that we have taken the service in the current financial year, but we haven't paid the full amount. That means now we owe that amount for that particular expense. So that is my other payable, it is my liability. So prepaid expenses is other receivables and owing expenses is other payables. And they have given you, for wages, they have given you other payables at start, that is 210, but there are no other payables at end. But for fuel, we have other payables at start and other payables at end. For trade receivables, income owing, they have given you opening owing of income, that is 2800, and then they have given you closing owing of income, that is 3270. This means that at start, last year I had given some services for which I did not receive the money, so that is 2800. This year I have given some services for which I haven't received the money, that is 3270 at end. So this is trade receivables, income owing at start and income owing at end. Then they have given you other receivables, office rent and rates, opening other receivables and closing other receivables. This is my prepaid. So in office rent and rates, I have prepaid at the start also and at the end also. In case of insurance also, we have a prepaid at end. We don't have a prepaid at start, but we have a prepaid at end. Then they are saying they've given you this extra information which we need to solve first, and then we will move on to making the income statement. They're saying here, during the year ended 30th April 2022, total income received was 71,690. That is what we have received in our bank. So what we did was that we basically did bank debit for this. So when we make the trade receivables account, so trade receivables, income owing at start, we have income owing at start. So if we prepare a trade receivables account here, so we need to trade receivables, we have a brought down at start on the debit side. Trade receivables are the assets for the business, it's a current asset. Income owing at start is 2800. Income owing at end is how much? Here the income owing at end is 3270. So I'll write here 3270. What we have received from our trade receivables during the year was 71690. So now think of the double entry here. Bank will be debited, so you need to credit the trade receivables account. So I'll write here bank. On the credit side, I will write here 71,690. So now the total services that I have given for this year would be would come out to be, would come from here. This is basically your total revenue or total income, which will come out to be 72,160. So this is basically your sales or your revenue for the current year. Then they are saying here, uh, Ali took total drawings of 35,550. This is cash drawings. It's fine. Okay, we'll incorporate this when we are making the statement of financial position. Cash drawings don't go in the income statement. Then they're saying the following payments were made. For wages, we have paid 15,920. For fuel, we have paid 8,140. So basically, I need to make T accounts for all these four expenses here, which is very important. I have prepared an expense account format here just to show you guys that if it's an owing brought down at start and owing carried down at end. So for wages and for fuel we have owing, for wages we have owing at start, but for fuel we have owing at start and owing at end. So what I need to do is that I need to make an expense account and calculate what I will charge in the income statement for wages or for fuel. So I will simply prepare the wages accounts, wages T account first, which is very simple. I know the placement that if there is some wages that I owe my employees, right? So I've taken the services from my employees, but I haven't paid them the full amount. There's certain wages that I haven't paid. Last year I had taken services, but I did not pay them that amount, which is in this case 210. That becomes my owing brought down. This is my liability which I need to pay this year, right? So this is my liability. So owing brought down will come on the credit side. What I have paid for wages during the year is 15,920. So for what you pay, you do basically you do wages account debit, bank account credit. So you need to write bank here on the debit side. I have paid 15,920, so I'll write here 15,920. And this is basically what you pay, you credit in the bank account, so you need to debit the wages account. And here, from here you will find out the value for income statement. The value for income statement in case of wages will be 15710. This is my value for income statement for wages. Then I will make my fuel account. So for fuel, again the owing brought down will come on the credit side. So fuel here, we have other payables at start and other payables at end. So you start with an owing brought down, that will come here 310, and other payables at end is 480. So I'll write here owing carried down is 480. Then we have bank. So bank, for bank we have paid 8140 for fuel. So I'll write here 8140. Again for fuel you'll do fuel account debit, bank account credit. That is why it is coming on the debit side of the fuel account. From here you will calculate the value of income statement. I'm writing it IS here because this is all working. You can still write IS in your working, but you cannot write short forms in your final answer, but this is your working. So this is 8310, which is the income statement value that you will charge in the income statement for fuel. Okay, for insurance they are saying we have paid 660 for insurance, and for insurance we have prepaid at end. So we can make the insurance account here, and the prepaid carried down basically will come here. We are following this rule for the expense account. I always tell my students this is the rule POOP. So this is basically what we know for insurance, that is prepaid carried down, which is 110. And what I have paid through my bank is 660. So when I do 660 minus 110, I will get an income statement value of 550. That is for my insurance, which I will charge in my income statement. Insurance will be 550. Now I have one last T account, which is an expense account, that is office rent and rates, for which I have paid 7,800, but we have a prepaid brought down and we have a prepaid carried down both. So when I make this account, I will write brought down on my debit side. I'll write here prepaid brought down 600. I'll write here prepaid carried down 1200. What I have paid for my office rent and rates is 7,800. So 7,800 plus 600 minus 1200 will give me my income statement value, which will be, in this case, it will be 7,200. Yes. So 7,800 plus 600 minus 1200 will give me 7,200 for my office rent and rates. So I'll write on the top office rent and rates. Now in the next thing they are saying bank loan and interest payments interest repayments uh, is 740. So if you guys see, I discussed that earlier that your bank loan is reducing by 700, which means 740 of this 740, 700 is my bank loan and $40 is my interest payment which I am making. So $40 will go in my income statement as my interest expense, which I'm paying for maybe the current year. This is an interest expense for the current year, which I am paying here. Then in the additional information, they are saying motor vehicle is depreciated using the straight line method over 5 years. The estimated residual value of motor vehicle at the end of at the end of year 5 is 4,000. Okay, so basically they are expecting you to apply this formula: cost minus scrap value divided by useful life, which is my formula here, which I need to apply. So cost here is 34,000 minus scrap value is 4,000 divided by useful life is 5. So your answer will come out to be, for your depreciation, the answer is 6,000. Yes, so we have depreciation of 6,000 for motor vehicle in the current year. Then they're saying Ali wishes to maintain. Okay, then they're saying on 30th April 2022, income owing to Ali of 3270, which is here 3270, included an irrecoverable debt of 70. Okay, irrecoverable debt is my expense, which I will not recover. So 3270 minus 70. So this is my trade receivables at end. Now you multiply this by 5% to calculate the provision for irrecoverable debt. So 3270 minus 170 into 5% will give me 160, which is my provision for irrecoverable debts at end. So my provision for irrecoverable debts at start is 140 and provision for irrecoverable debts at end is 160, which means provision is increasing by $20. So $20 will go in my expenses section of the income statement as an expense, which is provision for irrecoverable debts. Also, irrecoverable debts will be $70, which I will put as an expense in my income statement. Then they're saying the balance on the bank loan is repayable in 2024. We are going to make our statement of financial position at 30th April 2022, which means if the remaining bank loan is repayable in 2024, so that means the 1800 here is our non-current liability, which I will write in the non-current liabilities section in the statement of financial position. So here they have given you the whole thing. I mean, that's a good thing that they've given you this template already. You will just have to put in the values. So for income, I calculated that from consultancy services, Ali is basically earning 72,160, which I have calculated here. This is the income that is supposed to go in the income statement. Okay, so basically this is very important to know that income statement is not based on cash concept. Income statement is based on accrual concept. What accrual concept means is that incomes are recorded when services are given. So when your money is received, that is not important. The important thing is that if you have given the service, then that is your income. That is supposed to be part of your income in the income statement. And if you have taken the service, in case of expenses, if we have taken the service, but whatever we have paid, if we have paid extra or we haven't paid the full amount or we haven't paid any amount, but we have taken the service, so we need to write that as an expense in our income statement. So here for wages, I'm going to write income statement value for wages. This is 15,710. So I'll write here 15,710. And I'm using the first column because all the expenses I'll write in the first column and then the total I'll write in the second column and then calculate my profit for the year. For fuel, again, for fuel, I have made the account. And yes, fuel is 8310. So I'll write here 8310 for fuel. For insurance, again, I have made the account. This 550 is for insurance. I'll write here 550. Then depreciation, I calculated depreciation for you guys, which was 6,000. Yes, so this is my depreciation 6,000. I'll directly write 6,000. For office rent and rates, yes, I made the T account for office rent and rates. Here's my T account for office rent and rates. 7,200 is the amount. So I'll directly write 7,200 for office rent and rates. I know irrecoverable debts was $70 because this is here irrecoverable debt $70. They've written it in the points. So yes, they've written at 30th April 2022 income owing to Ali of 3270 included in irrecoverable debt of $70. So yes, irrecoverable debts you'll write here $70. Provision for irrecoverable debts I'll write here $20 because opening provision for irrecoverable debts was for 140, closing provision for irrecoverable debts is 160. So $20 is the increase in provision for irrecoverable debts, which goes in the expenses section of the income statement. Also, bank interest. Bank interest in this case, I calculated that it was $40. So I'll write here 40. And then I will basically total these expenses. So the interesting thing that you should know for income statement of service businesses that there is no cost of sales section. It's just like my own business. Like if I earn through tuitions, right? So tuitions is a service business. It's not an inventory based business. In businesses where there is some product that is being sold, we have inventories, we have a cost of sales section in the income statement. But because it is a service business, so we are just providing services and from that we are earning money. So there is no cost of sales section, there are no inventories opening or closing in this case. So when I add all these expenses, I need to find my profit for the year. So 15,710 plus 8310 plus 550 plus 600 plus 6,000 plus 7,200 plus $70 plus 20 plus 40 is going to give me 37,900, which is my total expenses. When I subtract 37,900 from 72,160, I'll get a profit of 34,260. 34,260 is my profit for the year in this case. So in part B of this question, we need to prepare a statement of financial position for the business of Ali. And remember, this is a service business. We'll start with non-current assets at the end of the year. So we have cost of non-current assets was the same. It did not change. So I'll write here 34,000. Cost of motor vehicles. Accumulated depreciation at start. Accumulated depreciation at start was 12,000 given in the question, plus 6,000 is what we have charged as depreciation in the current year. So that means my total depreciation at the end of the year will be 18,000. So 34,000 minus 18,000 should give you 16,000, which is my net book value at the end of the year. Then in the current assets section, I will have to write, okay, trade receivables at the end of the year were 3270. From this, there was a $70 irrecoverable debt, which means my trade receivables after subtracting irrecoverable debts was 3200. And then provision for doubtful debts, the latest provision for doubtful debts I have calculated is 160. So 3200 and 160 was the amount that we calculated for provision for irrecoverable debts. So I need to subtract 160 from my statement of financial position, which I will subtract, and what I'll get here will be 3040 will be my trade receivables minus provision for irrecoverable debts. Then we have other receivables. So in this case, we have two other receivables at end. So two other receivables at end. One is for office rent and rates, prepaid at end is 1200. For insurance, prepaid at end is 110. So 1200 plus 110 will give me 1310. So 1310 is my other receivables. I'll write here in brackets 1200 plus 110. So prepaid expenses are other receivables and owing expenses are other payables. So 1310 plus 3040. So this will be 4350. So 4350 plus 16,000 should give me 20350. This is my total assets at the end of the year. Then in the capital and liability section, I will start with capital at start. So capital at start here, they have said equity at start here is 17,100. So equity is the word for capital. Equity is also the word for capital. I'll write here 17,100. Then I need to add profit for the year. So add profit for the year 34,260. Add profit for the year, I will have to add 34,260 in this. So I'll write here 34,260. When I add both of these, 17,100 plus 34,260 will be 51,360. From this, I need to subtract the drawings. In this case, drawings is 35 35,350 is my total drawings here. So I need to subtract 35,350. I'll write here 35,350. I'll subtract from 51,360, 35,350. This will be 16010 will be my capital at end. Then in the non-current liabilities section, I have a bank loan, and bank loan at the end of the year, we did repay 700 of the bank loan, and at the end of the year, we are left with 1800 as my non-current liability, which is repayable in 2024. This was written in the details in this question. So I'll write here 1800. And then we have a bank overdraft at end. So bank overdraft at end is 2060. So I'll write here 2060 in the bank over in the second column 2060. And then I have an other payable. So owing expenses at end is other payables for fuel is 480. I just have one other payable here that is for fuel, and that is 480. So I'll simply write 480 here. So this will add up to 2060 plus 480. 2060 plus 480 will give me 2540. So now I will add the capital and liabilities section as well. So 16,010 is capital at end plus non-current liabilities 1800 plus 2540. So to all when I add these three, that is capital at end plus a bank loan plus the current liabilities, it will give me 20350. So 20350 is my balancing figure, and my balance sheet has balanced here in this case. So that's it for this question. This was a service business income statement and statement of financial position. So I hope this helps you. Thank you so much for watching.